Proving related party service fees, a multi-million-dollar transaction can be completely invisible, existing only as a single line on a ledger. For finance leaders, the challenge isn't just making the payment, it's proving the service actually happened. This is how, for many global companies, this is standard practice, a simple invoice for management services. To an auditor, however, this solitary entry is a red flag, suggesting profits are being shifted, not earned. But what makes it so suspicious? Regulators increasingly apply the substance over form doctrine. They are not interested in the contract alone. They want to see what employees actually did and the value that was created. How do you build a bridge to prove it? The core of modern proof is the benefit test. The service must provide clear commercial value, so much so that an independent company would have paid for it or couldn't have performed it themselves. This requires a solid foundation. Your proof is only as strong as its weakest link. A robust evidence chain must connect the initial contract, proof of service delivery, the payment record, and the final tax reporting. If any link is missing, the entire structure fails. Generic labels like technical assistance are audit red flags. Instead of asking what to call a fee, ask what problem it solved. This shifts the focus from accounting convenience to operational reality. But who confirms this reality? It's not enough to say the service happened. You must prove the recipient acknowledged the value. These review signals, like a CFO sign-off or committee minutes, are concrete proof of an active managed business interaction. While the principles are global, the rules are local. Documentation that satisfies the IRS in the US might be insufficient in Germany or Japan. Local expertise isn't a luxury. It's essential for avoiding penalties. So how do you manage this complexity? The most effective strategy is moving from reactive scramble to proactive governance. Assign a dedicated evidence owner for each major service who is responsible for collecting proof quarterly, making it part of the business rhythm. Think of it like a science lab. A claim is worthless without the lab notes to back it up. In finance, you don't get credit for the work you did. You only get credit for the work you can prove.